Hello, welcome to European Open Briefing for Friday, September the 21st. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the markets look set to end the week on a positive note as risk appetite continues to recover amid less concerns about the impact of the rising trade tensions between the US and China. So the receding demand for safe havens such as the dollar and the yen has pushed the dollar index to 2 month low, but the weaker yen has driven the dollar yen pair to 2 month highs. Dollar yen did earlier come close to 113 levels, currently trading around 112.70. The euro and sterling also benefiting from a weaker US currency, in particular the euro, which earlier touched the 1.18 handle, is currently trading around 1.1770 against the greenback. Sterling yesterday jumped towards the 1.33 level on the back of much stronger than expected retail sales numbers out of the UK, but the lack of breakthrough in Brexit talks has now led to sterling to pare back those gains, currently trading around 1.3213. The risk-sensitive Australian dollar yesterday surged higher, coming close to the 0.73 level, and together with the Kiwi both managed to make fresh 3-week highs. The Aussie is more or less flat this morning, around 0.7288 against the US dollar. The Kiwi marginally extending its gains at around 0.6693. The Canadian dollar, despite the fact that there's still no clear indication as to which direction the NAFTA talks are going, did manage to set a 3.5 months high yesterday on the back of the weaker US currency, which has also boosted commodities such as gold. Gold prices are currently trading around $1,208 an ounce. Oil prices, though, did come under pressure yesterday after President Trump urged OPEC leaders to lower oil prices by increasing output, mainly due to the Iranian sanctions, which are due to come into effect soon. OPEC countries will be meeting this weekend, but it's unlikely they will agree to raise output. But if you look at equities, we can see that the risk-on sentiment has given a major boost to global stocks. In particular, in China, we can see stocks up by between 2.5% and 3%. Yesterday, we saw the Dow Jones, S&P closing at record highs. And if we look at the major movers this morning, we can see Euro Pound is the biggest gainer. Mainly on the back of that setback in the Brexit talks and broadly stronger euro. But at the bottom we can see pound dollar struggling this morning as the EU has rejected Theresa May's Brexit plans and want her to rethink about the Northern Irish backstop proposal. Let's now move on to the dollar index. We can see there it's currently trading at 2 months lows. It earlier hit 93.83. Dollar yen earlier touched 112.87. So investors are now less pessimistic about the impact of that trade war between the US and China. So that's why we're seeing a rebound in demand for risk assets. We also have been seeing US Treasury yields climb higher we're seeing the 2-year yield touching 10-year highs and the 10-year yield touching 4-month highs as there's expectations that the Federal Reserve at its policy meeting next week will sound more hawkish. So this is boosting dollar yen, but the risk on sentiment is weighing on the dollar against other majors. And a quick look at the euro, we can see that brief spike above the 1.18 level to a 3-month high earlier today. The 1.18 level has been a strong resistance area in the past, so it's unclear whether or not the euro will be able to move significantly past that region, especially as we've got the Italian budget coming up over the coming weeks, and that could weigh on sentiment for the single currency if the Italian government decides to increase the budget deficit by more than what is allowed under EU fiscal rules. But in the more immediate focus, we do have Eurozone flash PMIs due shortly. Which will be watched for signs of whether or not Eurozone growth is improving. And finally, taking a quick look at the Canadian dollar, we do have retail sales and inflation numbers coming out of Canada later today. Those could point to possible rate hike by the Bank of Canada at the October 24 policy meeting if they do come in on the strong side. In the meantime, NAFTA talks are still going on, but it's unlikely whether or not a deal can be reached by the October 1st deadline. Therefore, the Canadian dollar is at risk of suffering some losses if those talks don't have a positive outcome. In the meantime, though, the loonie is holding firm towards yesterday's 3.5 months highs. And a quick look at what's coming up later today. Apart from the Canadian dollar and the Eurozone PMIs, we also have the US flash manufacturing PMI. That's it from me. Thank you very much for watching and have a great day.